All right. We're still on the mobile setup. We are still on the mobile setup. We're back at it. Just gonna do this trade recap. Got clapped, straight clapped with SPY. Straight clapped. Got clapped up. But gotta handle the disclaimer slash disclosure before we can get it popping, and then we can get into today's trade recap. Was hoping that it was going to be a nice one and done with the profits in the green side. But before we get started, let me go ahead and read the disclaimer slash disclosure. So please note that the following is not legal or financial advice and is provided for informational and educational purposes only. Investing in securities carries a high degree of risk and can result in the loss of your entire investment. You should consult with a qualified financial advisor or legal professional before making any investment decisions. And the information contained in this presentation does not constitute an offer or solicitation to buy or sell any securities or other financial instruments. Any opinions expressed in this presentation are subject to change without notice and should not be relied upon as a recommendation to buy or sell any securities. Please do your own due diligence and research before making any investment decisions. All right, Danny W., Mr. TN, TSC Films, thank y'all for coming through. So clapped up with the two-piece from SPY today. Still trading my system, still trading my same setup. So, of course, we all know that comes with the territory. I'll bring this in just a little bit closer so we can see it. And then we can get into some other things going on with the market. But I've been trading the opening range breakout lately. And, of course, I mapped out the pre-market high and the pre-market low. So what we're looking at, let me actually change this to the 30 because I was throwing this off. Okay, so the top chart up here where my fingers is at, where my hand is at, is the 30-minute chart on SPY. And then on the bottom is the 7-minute chart. So these are the two main time frames that I've been using lately. But I should have knew that it was going to be a little bit of a choppy morning with this wildness right here, with this crazy demonic bearish candle on the 30-minute chart during the pre-market this morning. But I mapped out the pre-market high, the pre-market low, and then we mark out where the price opened up. When the market opened, where did price start at? So it looked like we had a little bit of a bullish sentiment, right? And we actually do. It's still a bullish day. I went ahead and kind of took my setup, showing that we closed above the 30-minute or above the opening off of that kind of like 30-minute, if you will. But where I slipped up was, and this goes back to the last time I was on live, right? Where I slipped up is you just have to really, really be sharp if you want to trade in the first 30 minutes of market opening. Now, all last week, all of my trades were in the green, profit, successful trades using the 7-minute chart within the first 30 minutes, looking at the like kind of opening range with the opening price. And so today, SPY just kind of clapped me up twice. I got in on my calls because we closed that 7-minute above price open, and then we dipped back down and I got stopped out. Same thing right about here. I went ahead and tried to take it again, looking like we had some support, which we technically did. But as soon as I got in, we dropped back down and I got stopped back out. So it comes with the territory. A sharp reminder for me not to get crazy with trading within that first 30 minutes, even though I had a lot of success last month. And it doesn't mean that I should change my strategy. Just remember that everything is in probabilities, right? Everything's in probabilities. So that was the alert today. And this to show y'all, just to be transparent. I showed it when in the Discord. I know it's a little hard to see here on showing the screen on the iPad, but there was a screenshot of getting in at 6:36. Just a reminder for all of us that I am in California. So the market opens up for me at 6:30 and then getting stopped out right away. So I'm just glad that I stuck to my stop. I didn't let the loss get too crazy, but we did bounce back up. So it was a reminder for me that the overall strategy, right? The overall edge to the strategy is that you really do, or you really should wait for at least the first 30 minutes of the market to pass, as we can see up here, to really let you know if you want to trade the opening range breakout, to really let you know your direction, whether you're going up with the calls and the bulls or you're going down with puts and the bears. And so had I done that, I still would have needed to have some risk tolerance, right? Because of how this hammer formed. We have this strong kind of pull back down into here. But then if you just would have rode it out, you're just kind of chilling right now. All right, let's see who's rocking with me today. Let's see who's rocking with me. All right, Stacy, thanks for coming through. I feel like it's been a minute. Don Banks, 1991. What's going on, my guy? User 30837553922149. Yo, Doretta, thanks for coming through. There's Jeff. Good to see you again. Los DTO3, and MJ. All right, thank y'all for rocking with me. Thanks for coming through. Thank you for the follows. So yeah, I keep it transparent. Not every day is going to be a winner. I'm still trading my same setup, my same strategy. I took my L and went. No revenge trading. No, not letting emotions take over. The name of the game is longevity. We want to protect our capital, so we can't let our emotions get out of control and dictate how we trade. But with that being said, let's go take a look at the Qs, which we know is going to mimic SPY. Pretty much the same thing that we see there with the price. I didn't do the charting for the price opening, but price opened right about here on that 30-minute mark. But if y'all want to check out any tickers, let's look at some tickers, see what's going on. It's been a while that I've looked at other companies. For like the past maybe 3-4 weeks, I've been really just looking at SPY and QQQ, which is odd because I never thought I'd become one of those types of traders where I only looked at one or two ticker symbols. So I'm so used to, using my watch list over here on the right hand side, going through every single one of these every single day with the previous trading strategy that I had. But now I've realized I've gotten a lot of success with just using the opening range breakout on SPY and QQQ, especially because there's a lot more liquidity, as we all know, with the SPY contracts for options trading, right? There's a lot more options there for your what's the name? User 30837553924149 says, then just dollar cost averaging VOO, VTI, and VOE forever. All right, Pete, thanks for the follow. That's what's up. That's what's up. All right, my account is up 975,000. I'm 53 and thinking of cashing out and putting into interest account. I can't give financial advice, but I would imagine if I was up almost $1 million, I would be looking for a little bit of protection to the capital, especially if everything was in the market, right, in the stock market. So I would be thinking the same thing. So I feel you there right there. And that dollar cost averaging, can't really go wrong with that. So big shout out to you. Big shout out. It's a definitely accomplishment, especially with the state of the economy and most Americans. The retirements is kind of crazy right now for a lot of people. Give me just a second. I want to get a little bit more light in the room, y'all. So hold on. All right. Appreciate y'all. So let's see what we're doing. Let's see how we're doing. Any ticker symbols. The one I'm very interested in because I haven't looked at it in a long time. Let me close that. It's a lot easier actually to go through and look at the tickers this way. And I want to look at Amazon. We'll just start there. But let's just see how some of these companies are doing. So just kind of using the strategy, we'll talk through it and I'll kind of talk to what I see. Like I said, I'm not big on trying to predict anything, not in the slightest, but using the opening range breakout strategy, what we want to do is we want to chart out that pre-market high and that pre-market low. Now I use the 30-minute and 7-minute time frame. So up here on the top chart, and we'll just focus on the top first. All right, so this first candle here looks like TradingView saying that the pre-market opened up, or the low at least, was 176.40. So we're almost right there. We're taking a look at Amazon, and we just want to mark that pre-market low, 176.40. And then we want to go and grab that pre-market high, which appears to be this candle right here on the 30-minute chart. So we're looking at Amazon's pre-market. And TradingView saying the high is 178.18. So we want to bring this down. Boom. And then the next thing we want to do is we want to make a note of where did the market open. And it opened up on this candle at 177.72. So we'll take, where's that other? I like to use a blue line for the opening. 177.72. Boom. And so perfect. This would have been a nice one. And that's what I also forget too. You can use some of the other ticker symbols like Amazon, like GOOG. And then now what we saw here, right? We've got our pre-market high. We've got the pre-market low. We let the first 30 minutes kind of get us some direction. We saw that it closed below the opening. And then what we would look to do is enter for push to the downside. And you would be eating pretty good. I mean, we got some of this pullback. So hopefully, you wouldn't have been greedy. You would have just took profits and would have been good. And of course, as we all know, one of the things I've been incorporating into my trading strategy, especially with trading like opening ranges and entering like that, is just understanding that, 99% of the time, a candle is going to have a wick, a downside wick and an upside wick, right? So I call that the pullback. And the reason why I spotlight that is because it allows you to think about, instead of just getting in right when the candle's open, allow some of the manipulation and the expansion to kind of take place, right? And you can get in up here if you're looking for push to the downside, and then you're giving yourself more breathing room either on your stop or your risk management, and then you could just flow this all the way down, if that makes sense. All right, let me see if we got any comments in here. All right, what does everyone think? I think that's a good, we can't give financial advice, but I would tell you if it was me, I would be looking to do the same thing. That's user 3083755. Suki says QQQ. You want to take a look at the Qs? We can do that. Elias Perales, thank you for the follow. Really appreciate you. And then Studio Garage is in the building. Studio Garage is in the building. So we saw there, if anybody wants to go over the strategy, that's how you would do it if you were trading Amazon. You got your pre-market high, pre-market low. We marked out where price opened up. You wait for that 30 minutes to close. We saw that price close below where it opened, and then it just gives us an indication to take push to the downside. That's the raw skeleton structure of the strategy. But you can also incorporate other things that give you more confirmation, right? If you want to use VWAP, or if you want to use a higher time frame, or if you want to look at some volume, if you want to look at any other indicators to add to the opening range, you could definitely do that. But just want to show you guys the general breakdown of how the strategy is. So we can take a look at another ticker symbol. Let's just take a look at Google and see how it would play out for us. Let's go to Google. All right, QDog 30349 says, what's the best time frame to trade on? So can't really tell you a best time frame. There really isn't one time frame that's better than the others. What I will say is, of course, and this is going to sound very cliche, right? It all depends on your trading style. So that's one. And then number two, generally speaking, higher time frames are stronger signals or indicators, right? So the lower your time frame is, the less strong it is that price is going to be heading in that direction, right? So if you're only using like a 3-minute and you're looking at the 3-minute and it's appearing bearish, it may be a little bit of noise. It may not be as confirmed as looking at a 1 hour or a daily time frame that's bearish, if that makes sense. So the higher the time frame, the more confident you can be in the signal that is giving you. But just to reiterate, there's no one time frame that's better than the other. You just want to find a style or a strategy that works for you. All right, Suki says, we'd really love if QQQ tested the high of day again. QDog says, thanks, bro, for sure. All right, we're going to check out QQQ right now because I hope I'm pronouncing it right. Suki's looking for it. So here we've got QQQ. And we're currently looking at the 30-minute chart on QQQ. Forgive the kind of glare in the lighting, y'all. Let me kind of tilt that for us. And looks like we made a high of day on this current candle, and Suki's looking for it to come back here and test. So the overall bullish day on the Qs. We can kind of clean up our pre-market charting. I'm just going to eyeball it for the sake of time. And then we want to bring this to where we open, which we already got. That's about so. And that could be another indication too, right? Once we broke above and closed above the pre-market high, you might have maybe considered to enter into calls to the upside. Let's zoom us in so my hand doesn't look so crazy there. All right, so we might have considered taking it to the upside. Of course, you've got some risk tolerance, risk management right in here because it used the pre-market high as an area of support for the day. So if you did enter in right on this candle, you would need to have some tolerance here, some risk tolerance. Or you could have waited for a little bit of a pullback, right? If you maybe entered in when the price was around here and then continued to ride that up. Yo, thanks for rocking with me. We got a few people in here. Drop some likes and some shares. So right now it's looking like for Suki, who's in the audience, it's looking like the Qs is really trying to test again, trying to push back up and test that pre-market high. We've got about 5 minutes left on this 30-minute candle, and it looks like it wants to form a doji. But as we all know, 5 minutes is a long time. This candle can turn into something gnarly, so we'll double check. But we want to test out or just chart out the opening range breakout strategy that I've been using on Google. So first thing that we do, we want to take a look at this pre-market. I use the 30-minute and the 7-minute time frames. That's what these two charts are. But just to give us a little bit of clarity, let's just focus first on that 30-minute. Okay, we'll focus first on the 30-minute, and then we want to update our chart. So we want to look for the pre-market high, and I'm just eyeballing it right about there. But we want to be right and exact. kind of got the hiccups. And then let's have TradingView tell us that the high on this candle was 167.65. So we want to bring this up just a little bit. 167.65. Boom. And then let's go grab our pre-market low. We're using the 30-minute chart. So it appears that this candle right over here is the lowest. So, and TradingView saying on this candle, the low was 164.46. I was off just a few cents. So we want to mark this pre-market low, 164.46, which is right here. Boom. So we got our pre-market high and pre-market low charted with the white lines. And then we want to go over here and we want to mark out where did price open up for the day. Now this is looking a little choppy. So as a scalper, this is one of our plays where we would just get in and out. Day trading, this would be a little choppy for you. But if you're looking for a quick scalp, this would be one to just get in and out. And so price opened up at 167.01. Let's be right and exact and bring up this right here to 167.01. Boom. Now, waiting for that first 30 minutes to do its thing. And once that first 30-minute candle of the day closed, we saw that it closed below where it opened, where price opened at. So that would just be an indication that we wanted to take puts. But it was a bit choppy with this long wick to the upside. So like I was saying, what I've been incorporating a lot more with the strategy is I just look at these wicks as pullbacks, right? So if we're looking for puts, the forming wick to the upside is what I would call a pullback. So I would want to wait for, that pullback to develop, then enter my puts in. So now I give myself some breathing room on my stop loss or my risk management or my tolerance. Then we can catch that put right all the way down. And then if you're a scalper and depending on where you're targeting your profit targets, your PT, getting in and out. Even able to get a little bit more downside, but then ultimately we started to get choppy and we're making our way back up. So definitely an opportunity for scalping there, but not for a long term in terms of the day, not for day trading to the downside. But you could have made a little bit of money just using that strategy there. And so one of the things that I'm doing too, just to show y'all, one of the things that I'm doing too is in my, where is it at? Boom. In my back testing log, I added a column that will, as I go back and back test, I look for the pullback amounts that'll tell me on average how much will the candle pull back. Now I have a mixture in here based off of the 7-minute and the 30 minutes. So depending on if you're trying to trade off that 7-minute or that 30-minute, you can filter it down and then it'll update the average for you. But overall, on average, there's about a 36-cent pullback. So if we kind of take that information there and we go back to our charting, right? And let's just say we're looking at this candle. This candle right here is where we would have entered on. And we waited for that 36-cent pullback on average, right? We would have entered in something like around here, around this area to our puts, and then kind of came on down. Of course, you still would have had to kind of deal with all of that still coming back. Let's see. All right. Is that Anaya? Is that pronouncing it right? Thank you for the follow. Just want to make sure I pronounced it. Jeff Mack, thank you for the follow. It looks like Adam's saying that they won't retest the high for QQQs. Let's go see. Might have missed it if it did kind of come up there and form a new high. Let's get that refresh going on. And it's trying. That's what I should have did earlier for Suki so we could all like try to take a look at it. I want to. Wow, that's crazy. I don't want to do that. Horizontal line. Let's mark out this high. Let's get rid of this. And then we'll make it an orange one just so we know we were looking for where that high retested. We just opened up a new candle. That's crazy how fast 5 minutes went by. Felt like I was just talking about that 5-minute disclaimer. Let's make sure we get the real high, 477.56. We want to bring this down. Looks like it's wanting to retest for Suki. Trying to get up there. Boom. All right, but there is a gap. We got a gap on this 30-minute. Oof. So let's see how long it takes for price to come back down and close this gap. And this gap is 27, 2, 1, 2, 3. 3-cent gap. There was a 3-cent gap right here. So let's see how long it takes price to close this gap. Looks like it might try to come down. And then we've got our high, and we're trying to close it. Yep. Yo, W, thanks for the follow. Will, what's going on? The Cavity Podcast. All right, not enough of a push for premiums to explode today. That's what's up. Thank you for coming through the Cavity Podcast. Really appreciate you. It's been a minute. So yeah, just been doing opening range breakout, just charting that out. We have somebody in the audience, one of our members, just looking for or hoping that the QQQs retest the high that was created. Don't know. It did need to close this gap that was just formed on the 30-minute chart when this opened. So you guys can kind of see that there, right? From where this candle right here closed and where this one opened, there was a gap. Maybe I should get the pin. If I get the pin, might be better than my hand. Who knows? Okay, let's do one more. So we looked at Amazon, SPY, Qs, Google. Let's look at one more ticker symbol just using that opening range strategy. And we will take a look at, let's just take a look at Tesla. Let's see. Let's take a look at Tesla. We'll go to the 30-minute. Where the heck is Tesla's price at? Way down here. We want to bring these down. So what we're going to do right now is we're just going to chart out using that opening range setup on Tesla on the 30-minute just to see how we would have played it out based off of that strategy, based off of that trading style. So of course, as we all know, just starting with the 30-minute chart, and you can chart whatever time frame works best for you. You know, if you want the hourly, if you want the 4-hour, you can do whatever works for you. Just for me, I do the 30-minute and the 7. So we want to find the pre-market low. And the pre-market low is 212.18. Almost had it exactly to the penny. 212. Oh my gosh. All right, pre-market low on Tesla, 212.18. Boom. Now we want the pre-market high, which appears to be right here. And this is looking choppy. This would have been a trippy one to trade. All right, and so that pre-market high is 217.74, off by just a couple pennies. So first step, we charting out or just mark out what your pre-market high is and what your pre-market low is. Boom. Then the next step, we want to mark out or chart where did price open, which I do with the blue line. And then let's see. And price opened up at 217.07. That's right where we're at. Good. All right, cool. Now, based off of this first 30-minute, what we would have probably been looking for was a little bit of indication, right, to take some puts. But one thing, if you like candlestick patterns, that would have kind of given you caution against that, as we had like this spinning top, almost like this doji on the first one. And if you were looking for puts to the downside, you would have got stopped out because we have this strong bullish sentiment. This candle came through straight up bulls. But looking at it from a scalper's perspective, right? Looking at it from a scalper's perspective, if we would have looked at it with the 7-minute chart, there may have been an opportunity there. So we'll go down here and the chart on the bottom, we'll put the 7-minute and let's just see. Maybe it wouldn't have been clean. You would have needed to get in and out depending on what you were looking for profits. But we had this candle right here close below the opening. So if you wanted to scalp puts, you would have literally need to get in and out really quickly just on this price movement, which may not have been worth it depending on the profits you were looking at. And then we had price just basically recover on the 7-minute. It closed above the open. There was a little bit of a fake out, right? So if you were still looking to take calls to the upside, you would have had to been tolerant enough to sit through this and then for it to come on up. So a little bit choppy on Tesla. That definitely would have had me stopped out. And that's essentially what happened with me with my SPY ones. But as we know, no strategy works 100% of the time. We just stick to the trading plan, stick to our stop losses and risk management, and then we just keep it pushing. Yo, Daryl, thanks for the follow. Appreciate that. Tattoo Inspo, thank you for the follow. All right. Leandro says SPY and DXY. Let's go take a look. I wonder if I've done DXY before in my charts. I have not. So can we no, I don't want to create a new loadout. All right, Jeff Mack in the building. Thank you. All right, let's see who's rocking with me. Yo, Simply San, thank you for coming through. Appreciate you. Belos Jorges or Belos Georges, thank you. Leandro, Daryl, Charger 700. All right. Russell Russ, Andy Rue. Appreciate y'all. Appreciate y'all. So we're just kind of looking at how prices moving today on some of these tickers, specifically using the opening range breakout trading style or trading strategy. All right, all right, all right. So it was a bit choppy, but that's what we expect, and that's why you exercise caution, especially if you were trading within the first 30 minutes. That's where I got to cut up a little bit today with my trading with SPY. But like I said, we all know that losses do come with the territory. You're just rewinding and breaking down charts. Yeah, just a little bit. Unless we want to look at something in the future, if we have some ticker symbols, I know somebody wants to take a look at DXY. So if we want to take a look at something in the future, we can take out something else. Give some thoughts, give some opinions. Of course, as we all know, this is not financial advice. So US dollar currency index. Okay. Is that the right one? Boom. I don't want this to be on the Tesla chart. We want to create a new layout. DXY. Save. That out. Why would it open up to Tesla? That's weird. Okay. File. And rename. DXY. Save. There we go. I don't want this to be Tesla. DXY. Wildness going on here. Cool. So let's just do some overall thoughts. I've been trying to get out of this whole thing of we're predicting where something's going to go. This is the US dollar index. I mean, I think we all kind of know overall what's going on with the dollar right now. It's just getting weaker and weaker. A lot of inflation, a lot of money printing. So I guess to a degree, you could be a bit bearish on the US dollar. Yes, indeed. All right. Let's see. Yo, Javier, thanks for the follow. Appreciate that. Yep, just overall bearish. Let's go out to a bigger time frame. We'll break this down just to one chart layout. And yeah. Bearish. You know, I've never done any Forex or currency trading, so it's a little bit different. But any tickers, any questions, we can do that. Any questions, any tickers people want to take a look at. And if Suki, if you're still in the building, looks like we did get a retest. We did get a retest of that high. So we had an audience member that was looking at the cues 5 to 10 minutes ago. We did a line where the high of the day was. They were looking for a retest of the high, and that's exactly what QQQ did. So Suki's in the building. That's what's up. Yes, I'm still holding my calls for now. Ooh, okay. Got some calls. What kind of expiration you got? You day trading? You got 0 DTE, 1 DTE? You got weeklies? Depending on where you got in, you should be in. Okay. So hopefully you got in down here, around here somewhere on those calls. I'm really hoping for you. Bought on the 7th. Oh. Bought on the 7th. All right, so we switched over to the daily chart. We got a member in the audience that bought on the 7th. Here is the 7th candlestick on the day. So this is what the candlestick looked like for the 7th. So just assuming that Suki purchased right in the middle of the day or right in the middle of the candlestick price movement, you've been able to ride all this the way up. Now, don't be greedy because you're definitely, I'm definitely up. I just want all the gains. Have you scaled out at all? Do you have multiple contracts? Please don't let the greed get you. We've got some gaps down here that need to be closed. So I just want you to be able to take some profit off the table. I mean, I can't give you financial advice. I can't tell you what to do, but I definitely want you to be able to capture some profit. I definitely do. Oh, snap. Definitely pushing it. Oh, diamond hands in here on the contracts, on the calls, diamond hands. And you said they expired today, though? You said they expired today? I mean, it's 10:40 West Coast time. We got 11:40, 12:40. We got 2 hours and 20 minutes left of the market being open. All right. Joel Sam, Nvidia's reaching 130 by end of the day. Before we go take a look at NVDA, come on, Suki, please, please. All right, Brianna Sims, thank you so much for the follow. I appreciate you. Suki says, I'm out soon. I just want to see what's going on. For sure, for sure. Please take profits. Please, please take profits. Thank you for the follow. I appreciate that, Brianna. Thank you, thank you, thank you. All right, let's go take a look at NVDA. Hopefully Suki takes profits. Please do. Please hit me up on TikTok later today. Just send me a message saying, "Bro, I took profits." That's all I'm hoping for. That's all I can ask for is that you took profits, because you should be sitting good right now. All right, Nvidia is at 128 as of right now. We're currently looking at a 30-minute chart. Let me turn off these indicators that I'm not really using, and then I'll also do the setup for how I would trade it. So we want to add back our extended hours. The first thing that we would like to do is we want to chart the pre-market highs and pre-market lows. So let me grab us a horizontal line. This candle right here appears to be the lowest one. We want to see what the low is. I like to make those pre-market highs and pre-market low lines white. So the low in the pre-market for, Nvidia. All right, so the low was 122.67. We want to get that right to the penny. Boom. And then the high appears to be this candle right here. And the high is 125.25. So let me be ambidextrous. Let's just go ahead and use two hands here. Bow. Let's bring that up a little bit. 125.25. Boom. We've got our high. Okay, then the next thing we want to do is we want to just chart out where did price open up when the market opened, which is right about here. So price opened up at 124.29. We want to make that line blue. And you can make it any color that you want. I just use blue and white lines. We want to get that right to the penny. Boom. And so what we want to do is, with the opening range, or at least the way I trade it, with the opening range breakout or orb or ORB, you hear people say different things. We want to let this first 30-minute candle play out just to give us an indication of which way we think price is heading. So price closed above where it opened at, which would be our bullish indication. Like I said, this is just the skeleton. You can add any other indicators or things that you're looking for to give you more confirmation, right? So if you like VWAP, if you like EMAs, volume, any of that other stuff, you can incorporate it. We're just going over the base skeleton. Suki, thank you for the follow. Izzy, thanks for coming through. Doug, I see you. So we've had price close on this first 30-minute candle. It closed above the open, a little bit of bullish sentiment. But what we had to have had was some risk tolerance or patience, or just some strategicness with this next candle, because even though it was still bullish in our direction, it had a strong pullback down here. So you had to have some good risk tolerance. Now, what I just showed you guys to help me out is on my back testing log that I've been building out. Of course, this is just for SPY, but I'm going to go back through and continue to add back testing for a whole bunch of different ticker symbols. But we see that there's an average of a 36-cent pullback, right? A 36 cents pullback. So if we went back here, we're currently looking like at Nvidia. Of course, TradingView kind of spazzed out on me. Let's see if we can get a refresh to correct itself. Oh, no. I don't think I had saved it before I did all this. My bad, y'all. My bad, my bad, my bad. All right. Lord. My bad. But the long and short of what I was getting at is we want to wait on that entry candle, right? If we're trading based off time on candles closing at a particular time, what we all know is that every candle, or most candles, right? 99% of candles, Jesus. TradingView is just really not working with me today. But 99% of candles have somewhat of a pullback, which is what we see here on Nvidia's second candle. This candle where we would have entered on, you would have had to deal with a strong pullback and then catch this ride all the way up. So based off of how I'm building out my back testing log, I would have waited for like a nice 36 cent or around 30 cent pullback, maybe entered in around here. We still would have had some more drawdown, but at least we would have gave ourselves some breathing room on our stop losses, depending on how you set up your risk management and your stops. And then we could have just rolled the calls all the way up to where we're at today. So that's what I'm incorporating into the strategy, and you can do it however you want, right? You can add, if you want to be cognizant or take into consideration the pullback. You know, you can go through when you do your back testing and just set something up like this. Boom. And then what I do is, as I add more back testing and I add different ticker symbols, right, I could just filter it down and it'll give me an updated formula or updated calculation on that particular ticker symbol's pullback amount. Because as we all know, different tickers, they have different average daily ranges, right? Their price is going to move a lot more. Obviously, Nvidia is going to move a lot more than QQQ. QQQ is going to move a lot more than SPY. So as you add to your back testing and you use those filters, you can have accurate or updated calculation of how much the candle may pull back on your entry. All right, Shri, thank you for the follow. What's up? What's up? Thank you for the follow. All right, do you have a video of you doing this so I can rewatch? Yes, indeed. Yes, indeed. So if you guys head over to YouTube, all of my trade recaps, my chart breakdowns are all on my YouTube channel. It's just Curtis G24, same as my TikTok name. So if you go over here, and you can see all of my trading recaps. All my trading recaps are in the YouTube. So if you ever need to go and check out anything, you guys can see all of my live trading, all my trading recaps that I've done. Everything is there. Yep. For sure, for sure. All right, let's go back over here. Of course, boom. All right, it fixed itself. So like I was saying, as you guys saw that, the way that the strategy works is I'm definitely incorporating pullbacks. We were looking for calls on Nvidia. Day is obviously bullish, but this would have been our entry candle. This second candle here on the 30-minute chart would have been our entry, and we just wanted to wait for a pullback, right? At least something, just to give yourself some breathing room. So imagine how dope it would have been if you would have entered, you know, around the middle of this downside wick, and then just let that ride all the way back up here. You'd be sitting pretty good. But that's the long and short of it. Like I said, that's the skeleton of the setup or the strategy of the trading style. Just opening range, 30-minute opening range on the pre-market highs, pre-market lows, which are these white lines here. And then whatever you want to add to it to give you more confluence or confidence, EMAs, VWAP, things like that, RSI, whatever people are using, you can also incorporate that too. And then go ahead and help it, allow it to give you your indications. And you don't have to use the 30-minute and the 7-minute. Those are the time frames that I like to trade on. But you can use the 1 hour, you can use the 4 hour, you can use whatever works best for you. And so the last thing I want to leave you all with is you always have to give credit and give propers where it's due. And so I don't think I have Twitter on my iPad, actually. I don't. Let me see if I can pull up his profile. But I just want to give shout outs and show love to the person who mentored me and taught me this, because it's really helped me to get more consistency in my trading. And it's made it a lot easier just to look for this for my trades instead of looking for everything else. But I think this is him right here. This is his profile. All right, so this is the cat. And no, I'm not getting paid. No, there's no sponsorship, nothing like that. But I always like to give propers where propers is due. So this is the guy right here on Twitter who mentored me, basically gave me the game and showed me this opening range breakout strategy. He has 7 steps, 7 rules that you want to look for each day when you're trading like this. And so I don't want to step on his toes. I would rather him get his credit, get his audience, his students, however you want to say it. I don't want to take from what he has, but I do want to show you guys where I have got this from, because it's not like I just made it out on my own. But this is where you want, if you want to learn the full front A to Z, front end, back end on the opening range breakout in this particular way, this is the guy that you want to go to. And so Joel says, do you call out your trades? Yes, indeed, I do. I do put my trades. I do put my screenshots, win, lose, or draw, my losses, my trading confirmations, all of that are all here. So I put it every day, or any day that I do take a trade, I put that in here. As you guys can see, stopped out of my SPY call. So today I was stopped out, which is fine. I stuck to my trading plan, and that is a success. That's a win in my book. Yo, Explicit Trades, thank you for the follow. Appreciate that. Appreciate it. All right. But I'm not going to keep y'all. I'm not going to hold y'all. We'll tap back in. I appreciate y'all rocking with me today. Spend any time. And y'all just, if you got any questions, truth be told, thanks for the follow. You guys don't hesitate to hit me up in the DMs. Just send me a request or something like that, or leave a comment on one of my videos. All right, y'all. Peace.